the introduction slide, you see Andrew Han. He will be your instructor, but I'm just going to have a quick introduction of the session. My name is Jose Blasco. Before I start, though, I would like to have a quick confirmation about the sound. Could you please confirm with a quick hello on the chat box that you hear me well? Sound is good, very good, fantastic. Again, welcome to the session, everybody. My name is Jose Blasco. I'm here just for a couple of minutes, maybe 3 or 4, and then the session will be handed over to Andrew Han, who will be taking care of planning the Forex trades today and looking at the Forex markets for position trading purposes, okay? But before that, again, I wanted to thank you for joining us. Obviously, this is an important week for us. We are launching a brand new service within FX Trade. And I wanted to point at a couple of things that are important for you to know, such as the education support email you can see on the bottom part of the screen. Certainly, you are welcome to work with us live during the session by asking questions on the chat box, and any question you have, the instructor will be looking at it and certainly assisting you on that. But there may be questions if you watch this recorded, for example, where you may look for support beyond after the session is over. And in this sense, keep in mind education support at fxtrade.com. This is going to be your reference email for you to gain support, okay? So again, looking forward to the session today. Andrew will be with you in just a minute. I'm just going to read for you the disclaimer. Like all financial presentations, we always have a disclaimer, so let's go for it. Forex Trade SLU provides generic information to its subscribers and is strongly advised that the client should consult with a financial advisor before proceeding to trade. While all information posted is believed to come from reliable sources, the company does not guarantee the accuracy, correctness, or completeness of information available from its service, and therefore will not be liable for any loss incurred. FX Trade does not provide investment advice, nor provide any personalized investment recommendation or advice in making a decision to trade. No guarantee is made that any user of this service will or will likely achieve the results advised by the webinar examples. There is often a large difference between theoretical performance and the actual results later reached by any trading platform. There are many influencing factors related to either the market in general or the specific implementation of any information which can affect actual trading buy and sell results. So before you start trading, please make sure you have considered your entire financial situation, including financial commitments, and you understand that trading is highly speculative and that you could sustain significant losses, okay? So as I always say, beyond the legality, which is certainly important, our approach to trading is certainly very, very serious. We are counting on you to have your own risk management rules. We are counting on you to be a disciplined trader, to not to break the rules, to manage risk, to use contingency plans such as using stops at all time, utilizing a reasonable position size to not to get into any financial trouble such as margin calls, etc., and follow us with this, very healthy professional mentality. Okay. By the way, if you ever need support into defining rules or methods of risk management that you haven't learned yet, make sure you speak up during the sessions or throughout the emails that you see on the screen. So remember, the sessions that we run, apart from being practical application where we're going to be live in the markets, there will also be lessons, especially over the weekend when the market is closed, where those sessions will be lecture days. And we can certainly use that lecture time to help you develop whatever aspects in trading that needs to be developed in each of your cases, because we understand that in this group, everybody is in a different place when it comes to trading. With all of this said, that's it. I am done with this introduction and I will now pass the microphone to Andrew. So Andrew, the room is yours and you will see Andrew's screen in just a second. Thank you so much and see you in the next one. In the meantime, Andrew will be leading you. Thank you very much.
Okay. All right. All right. How's everybody doing today? Just getting a couple of things organized here. So I can see your chats and using the room here. So everybody's doing good. All right. Okay, so we're talking about position trading today and kind of looking at how I approach it. So a little bit about myself. I used to work for a big multinational company. Basically traveled the world with them. Lived from Australia originally. Moved up to Singapore. Out from Singapore, went up to the US. Then back to Singapore. Traveled the region on different projects for the company, and then decided to make my own way by trading. So I've been trading for a number of years and love the Forex markets, also options, particularly on futures, and yeah, so that's kind of what I do, is focus on these particular financial markets, and this is a really great opportunity for FX Street to be able to share sort of some of the things that I've learned along the way, and also how I approach, in particular, Forex. So one of the things I guess we have to define, is really, well, what is a position trading versus swing trading versus intraday trading. So before I kind of jump into the chart here, let me bring up a little diagram here, and hopefully can everybody see this all right? Okay, so good. Thanks, Chuck. Thanks, Jose. Yeah, so this kind of uh, uh, a diagram of some time frames, right? So we're not going to focus on the left side of your screen there where it says customize. We're going to really just focus more on the standard side of the time frames. I think that's probably what people are more familiar with in terms of the time frames. So here you can really see that if you're a intraday sort of trader, you would tend to use like a for context, the 240 or the 60-minute sort of chart, and then you'd really go down to the lower time frames to plan your trades, where you got to place your orders. If you're a swing trader, you would tend to use either the daily or the 240-minute to kind of give your context for the trade, and then head down to a lower time frame of 60 or 15-minute to really identify those price areas that you want to be buying and selling. And so when we come up to the higher time frame of, or talk about position trading, you're really looking for your context of your trade within the weekly chart, and then you go down to your 240-minute to really identify those areas that you want to be buying and selling. And then finally, if you're an investor, you look at your monthly sort of chart for context, and again go down a time frame to kind of look at your uh, locations for where you want to be buying and selling. I'm not going to go too much into the benefits or the the advantages or the outcomes for the different styles. There are different reasons why people choose intraday versus swing versus position versus investor. Some of it has to do with time. Sometimes you have more time to spend watching, a 60-minute context or a 240-minute context versus somebody who, maybe you're retired and you're wanting to play golf, and so the context that you're wanting to look at is more of on a weekly basis, because every other day you're out there playing golf. You don't want to be glued to the charts. And so you multi-styled because you're maybe mostly a position trader, but you do like to do some intraday trading because you want to buy that extra special something for somebody, and so you put a little trade on and make a few $100 and you're good for that day, So there's different ways that different styles that different people have, and you can have a multi-styled type of approach to things. And so this is really just a guide here to show you what sort of time frames are available to you for the various styles of trading. So let me just jump back now to the charts. Does anybody have any questions about that in terms of style? If not, then let's get into things. All right. So every week, as we go, what I'll be doing is really firstly sticking. Well, I think this week, or at least this session, I'll probably just stick with the majors first, and then as time progresses and we look at different pairs, we'll be able to kind of build out, kind of work our way through this list, right? There's a long list of currency pairs here to work through, and we obviously can't work through them all at one go, you know. Um, but um, but let's start with the Aussie. So some of the things that I like to do, and it's kind of part of my background. When I was working for the multinational company I worked for, we obviously had operations around the world, and manufacturing company, and therefore different exposures, right? We had businesses in Australia, we had businesses in here in Singapore, China, Europe, everywhere. So you had to manage a lot of the currency exposures, and therefore very interested in making sure that, hey, if the Aussie is going down, and we've got exposure to the Aussie dollar, then we want to hedge it. We want to minimize the impact to a bottom line because of we're basically long Aussie, and if Aussie's going down, then we tend to want to hedge it. So that's kind of where I come from. That's kind of why I've got an interest in currencies, because of the global nature of the business I was working in, and also the interrelationships that you have between countries, right? I mean, the Aussie dollar, in many respects, is somewhat of a reflection of the trade between Australia and the US, just as the euro can be a reflection of the trade between the euro zone and the US. Maybe a little bit more, given that the US dollar is the reserve currency of the world, something a little bit more reflective of I guess a relationship could be like um, Aussie Sing, so the trade relationship between Australia and Singapore, there would be some obvious influence with what happens to the exchange rate, right? So this is kind of how I look at the world, how I look at the currency world, is through that sort of perspective. Okay, so yeah, so here we are. If we're a position trader, as I showed you earlier, you're really looking at the world from the context of a weekly chart, right? And from here you can kind of see that that the movement of the Aussie has been basically down, right? It's been pretty much from beginning of 2018. It's been going all the way down. So it's continuing to go, down. This little indicator down here is called, auto climate, right? And what this little indicator does is algorithm does is it tells us a couple of things. Number one, what is the trend that existing at the time? So what's the market environment? What's the weather? Is another way to kind of look at things. And if the if things are looking downwards, then you'll have these red sort of ruby dots here, and they would be solid. So let me just kind of expand this a little and make it a little bigger so you can see that, right? So when you have a red dot, it just means that you want to have a bias to uh, to the downside, right? When you've got a blue sapphire sort of color and it's solid, you've you've got a bias of more towards the upside, right? So that kind of gives you the context, and where you don't have a solid dot, whether it be blue or red, that climate is not confirmed. So basically you do nothing is what that tells you, right? Okay, so that's just a little bit of explanation here, but the idea is that these collars kind of tell you what the climate is, and so therefore you really want to be focused to when you go down to that lower time frame, in our case the 240-minute, that's what your bias is wanting to be, right? Is to look for shorting opportunities, right? Okay, so we can see here, okay, that prices move lower. We may also want to just check to see, okay, well, is there any sort of support here? Is there any sort of price action that gives us this idea that prices were not able to go higher or lower than at a certain point. And so here you can see, right, that the prices really kind of came up over since 2000 and even longer, probably 2002, 2001. It's gone all the way up, right, to GFC, and then 2008, boom, it came all the way down, right? But it didn't go beyond, kind of looks like this point here. So let's call it 59.90. Okay, just kind of round it out. And I like to kind of round out the numbers, to fives or tens, or I don't like those little increments. Just makes the math a little harder. You know what I mean? So what we do here is kind of just kind of see, well, where has price gone before, where hasn't it been able to get down to, and so let's see here. I think that's where it was, just there. And then we've got another sort of, some lows here, right? A little bit more recent lows. So what that's telling you, right, is prices that hasn't been able to get, right, over 1, 2, 3, 4, 5, 6 weeks, right? Before it really took off, it wasn't able to get past, 52. Let's call it 52.50, right? Okay. So price currently is down here. I think the low was 64.35. Okay, so let's just put the low there, right? Okay, so kind of have these areas where price could go lower. It could go even lower than down to 59.90, and it could even go lower than that, right? But it hasn't been able to get, even after the GFC, right? I mean, the lowest it got was down to that 59.90. So there's got to be some real weakness coming in to get it down even further, another from 64 down to 50, even 60, right? And the RBI just cut rates, so there's weakness came in, or actually strength kind of came in, but that doesn't really change that trend, right? That trend is still down. So you just have to say to yourself, hey, look, the context is down. I really want to be short, and so let's not try to do otherwise unless there really is something that's giving us evidence that says, hey, okay, if we're going to go long, then let's go long, but how far, what sort of expectation do you have in terms of your profits, but but we'll come to that in a second. So kind of look at the context of the various market that I'm looking at, preparing for, look at the climate. The other thing I do is I've got these, the unfilled orders. I've got the unfilled orders app where I kind of want to see, all right, from a bigger picture, where could I find potentially some, support or resistance sort of coming in, right? Where there has been interest in buying and selling. Where are those locations from this bigger picture perspective? And so I do that, and can see here that buying interest probably would only come in down at the 56, 57 level. So that's pretty far away. So I would say, all right, okay, as I'm considering going short, I would probably look at some sort of shorting opportunity here, and I could even throw one, some sort of moving average to give me a sense of is that a good area to that aligns, right, with some sort of other piece of information such as a moving average to just give me that sense of okay, well, what, if other people are looking at these moving averages, well, how would they respond to it? So let me just see here what I got. I think it was the 9. Yes, it's 9 period moving average. So so I'm looking for some sort of alignment of uh, these buy and sell areas with some sort of secondary piece of information, such as a moving average. And what I do is I just take a note of where that is, just to see when I go down to my 240-minute time frame, what point at which I want to see if there's other sort of alignment with some buying and selling sort of areas. Okay, so I've got my context, I've got my understanding. I've got thrown a little bit of fundamentals in there about interest rates. We can see it's a pretty decent move in the Aussie from this morning. And so now we're ready to go down to our time frame where we really want to be looking for where would we go short, where's a good place to go short. So we already identified on that higher time frame this area here, right? So what's this one? Let me get rid of this one first. Okay, so we know that this is the interest rate move. After the announcement, prices went higher. But if we had identified an area of potential selling, right? Is that is that a good place to sell? So let's again look at our turn on our app here to see where are some areas of selling, and what sort of buying is taking place here. Let's see. doing its algorithmic calculation, and boom, okay, there it is. Cool. All right, so we see here the algorithm has identified 1, 2, 3, 4 areas of selling, of areas where there are unfilled orders. And so what I tend to do is I just highlight those areas, just to make reference of them myself, right? Okay, and down here I've got areas where there has been previous buying, and so buying interest at these price areas right here. Okay, and so once I do that, I can turn these off, right? And then I can see that, all right, from a high time frame, the moving average, right, that point at which it was on the weekly was about here, right, at this price point here, say 68. Okay, so that's close to this area of selling which was identified earlier, right? And so but the thing is that to get up there, it needs to get through this whole area here, right, where there was a lot of selling that went on. There was a lot of interest for people who wants to sell, and so with price needing to move. Let's see how many pips here. It's gonna have to move from here to say up here. It's about 93 pips. If we kind of think about, well, what's the ATR? Daily ATR of excuse me, of Aussie. Usually it's about 60 or 70 pips. So it's going to take a couple of days, right, to get from where it currently is up to here. Maybe a day and a half, 2 days. If it's going to get up to this through this area, it's got to get through this area first, and it's about 180 pips. So I would rather look at planning for some shorts here and kind of see what other what's on the cards for check out Forex Factory, see what is there any news coming in. Is the dollar strengthening? Is there any evidence for dollar strength and or for continued Aussie strength? If there's continued evidence for continued Aussie strength, then because let's say somebody finds that vaccine, right, to this COVID-19, right, and then everybody's happy, and because it's got to stop the spread of this horrible virus, and get people back to work, right? Because that's the biggest problem at the moment is all the factories in China are shut down. They're not exporting. The markets around the world are kind of in a bit of a pickle. They've probably got inventory for a while, but eventually they're going to have to restock, right? So it looks like, oh geez, some news came out. Fed cuts policy rate by 50 basis points. Okay, interesting. So you see here, looks like I would expect is dollar heading lower. Let's just take a quick look here at the dollar index, maybe a little bit delayed. Let's take a quick look. What's going on? Dollar index. Let's take a quick look. Yep. So dollar's down. Let's see. Is euro responding higher? Yeah, bumping up a little bit. All right. Okay. Yep. So Aussie. That's what Aussie's doing as well. It's kind of responding to that rate cut. Right. So yeah. I mean, you kind of look at you need to kind of think through some of these fundamentals and see how things are reacting, and just kind of get to give you a sense, right, of what's those drivers, right, that's going to get you to your entry point. And if it gets to your entry point, is price going to shoot through? Is there some other piece of information that is going to give you a sense that, hey, price is going to be able to get through all of this to get to some of these high areas of selling interest. So some of these things, you can, you kind of have to think about and consider as you plan your trades, because things may not, and if things don't go your way, then what do you do, right? So this is where, these areas of selling, uh, is able to really help you define what your risk is. So also what I tend to do is kind of just double check, well, what are these coordinates, right? So that's one thing I really like about TradingView is that you're able to, look at all these, you know, uh, things pretty easily, access all the uh, uh, these menu bars, right? So that you're able to adjust everything pretty quick, and calculate, well, what's the risk? So here you've got basically a 25 pip risk. If you take that area to short, here we go from, let's call that 6750 and call that 6775, right? So here is another 25 pips, right? So you've got two areas where you can define, pretty clearly your risk is 25 pips here and here. If you did want to go, do a bit of a counter trend trade, you could do this, say 65, 35, so that's 30 pips, right? So if you did want to go long here, that's a 30 pip risk there. Here the risk is a lot wider, right? You can kind of visually see that. So let's call that 6150 and 35. So that's going to be 65, 75 pips, right? So these are the sort of things that you'll start to take notice of too. Is at these, the auto UFOs, they're going to define an area, and then, um, you start to observe, hey, what's the risk on this sort of time frame for this particular market, and if it seems a little wide, then you kind of know, okay, well, that seems wide to me. That's a little bit too much risk. But then you add in, if you've got any, space, add a couple of pips here and there just for to take account of the, the difference between the fact that we, normally on these charts we're showing bids, right? And so if you're going to be buying, you probably want to add a couple of pips. If you've got your stop, you may want to add, 5 pips or something like that, just to give you a little bit of room, for price to move. And but kind of the base risk that you starting to assess is 25 pips, right? So I think we've established that hey, we want to go short, right? This would be a nice area to go short, but again, if you've got these areas kind of before the area that you kind of like, hey, there's nothing wrong with saying to yourself, hey, look, I want to take these areas to go short, but my expectation of where price is going to go, or where I want to take my profits, may not be right. That, hey, look, I can't expect to get a 10 to 1 here, right? I'm not going to expect a 10 to 1 because it means that price is going to have to push all the way back to the lows, right? These are all-time lows for for probably a decade, right? So you can't expect that. And so maybe what you want to say is, hey, look, I still believe that, hey, this is a good area to go short, but maybe I just do, a 1 to 1, right? Or maybe I do a 2 to 1, right? And one of the things that you know, I really like to do is try to get a free trade, right? So so how you do that is you say, all right, hey, I'm going to sell Aussie here at this area here was at 67.10, right? Say I want to sell at 67.10. You know, I know that is a 25 pip stop, but maybe I want to add, you know, 5 pips just to give a bit of extra space, right? And I do a 1-to-1, right? I do a 1-to-1. Then I've got my 30 pips there. And let's say that, you know, let's say I've just got a small account, you know, say a $10,000 account, and I want to risk 1%. So, you know, I'm risking $100 per trade, but because I'm going to put 2 trades on, I'm going to risk just 50 bucks on this one, and then you know, let's kind of round this out so it's a little even, right? So I've got to risk 48 bucks. Use 16,000 units or 0.16 if you're using an MT4 platform, and so yeah, you kind of just put that on. So I get my 1-to-1, right? And then I put the same trade on. But let's say, hey, look, my expectations are it's not. I don't want to try for a 4-to-1. I'm just going to do, say, a 2-to-1. And so there, I know I just need to put 60 pips there. Still risking 48 bucks, right? On this half of the trade, and then I just put that on there, and whoa, happened there? Oh, I put the wrong entry. Sorry. So let me cancel that. Hey, and again, look, if you do something wrong, right, and you realize it, you just got to cancel it. You got to kill the trade, right, straight away. So here we go again. So let's do this properly. I didn't check this, right? I didn't check this. So 771, right? Okay, so it should be at the same spot. 671, 30 pips, 60 pips. Okay, now we're good. Okay, so yeah, I mean, you're not expecting a big move here, but you know, let's not be too greedy, right? Because look, prices are moving higher, right? And so you know, we want to stay with the trend, but hey, look, if there is some, you know, evidence that price is gonna you know, move the Aussie higher, then and we have that sort of concern, then just set your expectations to be a little bit more reasonable, right? Even though you could get you know, you know, here a 5-to-1 trade, is it going to do that, right? Is it going to do that? If you believe it is, then you know, express your opinion by putting the trade on for a 5-to-1 trade, right? Nothing wrong with that. Nothing wrong with taking your money earlier either, you know. But it's about making that decision for yourself. You know what you're going to do, right? So hey, anybody have any questions so far about how I'm approaching things? Some of the tools that I'm using. Any questions? All good. All good. Okay. All right. So cool. So here we are. We've got you know, a potential opportunity. You know, 2 potential opportunities here, and some additional opportunities up here. So one other thing that you know, I like to do as well is just bring up Fibonacci, kind of measure out and kind of see what sort of, you know, what sort of retracement expectations are kind of lining up with where I've got my, you know, where the area of interest is for selling in this case. So So here we can kind of see, all right, we're around the 50% retracement mark here. So that's a, it's a decent retracement. A 38 is probably a little shallow, and if you go down to 23, that's even more shallow. But I'm going to have sort of a decent retracement to get to that first entry. Okay, so that's a reasonable expectation to have. These areas here are a deeper retracement where it's around the 61.8% retracement. And I can kind of see up here, there's probably some areas that the UFOs didn't identify because these UFOs are only going to give you four areas of selling and 4 areas of buying. And so, but I can kind of sense here that there's probably some sort of selling opportunity around this 88.6 between the 78.6 and 88.6 of the area, right? So I kind of do a little bit of use a little bit of Fibonacci's there. Also kind of look at where the round numbers. So 67. So there's a good area where everybody's more than likely going to be looking, right? They're also looking at whole numbers. They're also looking at Fibonacci's. So this area is technically, right, is a good area for sellers to want to come in and join in the fun, right? So that's Aussie. That's Aussie. That's kind of how I see Aussie at the moment. Still kind of biased to the sell side, and yes, there is a little bit of buying pressure, which you want. That's fine. It's just got to kind of peter out, right, when it gets up here. Okay. But once you plan your trade, what I tend to do is just go back to my larger time frame, and really at because this is a weekly chart, I'll check in at the end of the week and kind of see, well, has this color changed, or is it the same, or has it gone to neutral? What's how's this week ending up? How's it ending up? Okay, so we've got another 12 minutes. Let's kind of work through another opportunity here. Let's see. Let's look at the New Zealand dollar. It's going to be pretty similar to the Aussie in that we're in this downtrend here. And also you've got the the climate also telling us that the market is down. Do we have any sort of areas here of how people would kind of define resistance? Has price kind of come back to these areas before? And it looks like it has tested around this area here, which is where it's at now. So it's a 61.9. Right. Okay. So could there be any interest to buy further down here? Well, I don't know, but let's ask the UFOs. Where are they seeing selling and buying sort of opportunities? And so here we have here on a weekly. I'm just going to draw a couple of these here, and then all the way down here, I've got some buying action, but I'm just going to put this here. So it's pretty wide. It's a little too wide for my liking, but I'm not trading, right? I'm not trading on this time frame. I'm just identifying the context, right? So again, bias to the downside. Go to my 4-hour. So we go back weekly. Let's check where my moving average was. Where is it? About here? Okay, there. Down to 4-hour, and you can see here similar price action, right? That's versus the Aussie. And let's see here. Let's turn on those UFOs. See where there's some, buying pressure, areas of buying, and there's some sellers probably interested in these price areas here, and then above. So really both those areas. So it's a kind of a wide area. So let me just go this lower one first. And maybe I'll move this one. Oops. Whole area here. Just repurpose that line there, just so I can not so busy. Okay, so yeah, this is the New Zealand, so I don't need those anymore. And again, let's check on my Fibos. High here. All right, so it's a decent retracement to 38. So I've got my UFO or area of selling that I'm interested here. 50% here. It's kind of the top end of a 60%. So probably just stick with this 38% here. That's what it's gotta hit first, right, before it gets up to this other area, which I prefer. Right, this second one up here at 36, 35, so 35, 35, and 65.05. And this one is 40, and let's see, that's 30 pips there. Okay, it's 30 pips, and this is 20. Let's call it 25, and call it 50. Right, that's 25 pips there. Okay, so again, let's just put risk. So that's, what was that, 64.10. 64.10. Stop loss was that was at 30 pips. Add 5, just make it 35. Get a bit of room there. All right. And take profit at 35 pips. And I've got $50 on a risk. Call that 14,000. So just a little under $50, $49. All right, place that trade opportunity there. And 40, 41. And this will be, again, let's just do a look at a 2-to-1, right? And just place that there, right? Okay, so again, my expectation is down, right? The whole environment is still down. A shallow retracement to my entry point here to go with that trend, expecting price to come up and then back down again, right? Can it can it go up and then come back down? Oops, go crazy, go down, and then could it punch back up, right? I mean, it could do that. It could continue down all the way down here, right? That's also possible, right? But at least I'm with the trend, So that's that, right? So we're gonna have to wait a while, right? Again, how many pips is that? About 90 pips, right? So it's going to take a day, a day or two to get up there. Same with the Aussie, that could be another day and a half to get up there. And then another, probably another half a day for it to respond out, right? For it to move, from, let's say, to get to our 1-to-1, we know we're going to get that one. That's like 40 pips. And then down to 70 pips here. I mean, that's a full day. I could do that in a day. So again, what's the expectation, right? What's our timing of when we need to look at this? Is this going to be done within a week? Yeah, it can be done within a week, right? But hey, look, price may not ever get up there. Price could just come up here and stop here and then get back down, right? So we don't get filled on our trade opportunity, right? But that's life, right? So we've got a couple of things that we can look at next week. I don't think I have time to do any more here. Okay, let me look at some questions here. Can we move our stop to entry as price moves in our favor? Right. Yes, you can. You can do that. That would be part of your trade management sort of rules that you have for yourself. So if you let's say you have your stop up here, right? You stop up here, and your entry point was down here, and as price moves lower and lower, right? As price moves into your entry point, right? Entry price, and then as price moves down lower, do you move it? When do you move it? Right, is the question. Do you move it when it's gone, 20 pips or 30 pips or 40 pips? You're gonna have to define that. So you could say, hey, look, given that I've got two trades here, one that takes profit at 1-to-1, right? When it does that, then you can move. So you could say, okay, then once it does that, because I've still got an open position, right? Then I'll move that to break even, right? Is what you can do. Or you may say, hey, look, I want it to move, and let's say that your target is down, all the way down here at 5-to-1, right? Once it goes 2-to-1, right? Then you trail your stop, right? So I think you just define that for yourself, and as you get familiar with the type of opportunities that or the market that you're trading and how it behaves, right? So I think that's how you do things. Okay. All right. Well, I think we're coming to the close of our session. Got a couple of minutes left. So let me just wrap it up and just say, hey, if you've got any questions about, how I trade, or, some of the things that we talked about today, if you have any questions about some of these tools I've been using, the auto UFOs, the auto climate, these sorts of things, you can just give me send me an email, right? And that's andrew@fxstraight.com. Okay, that should be an @ sign, okay? I don't know what's going on with my @ sign, but that should be @, okay? Just type it in, @. No, it won't. So andrew@fxstraight.com. Okay, so you can just send me an email there with any questions that you have about anything that I've talked about today, and then yep, it'll be good. Okay, so that's all, folks. If there's no other questions, comments, then we'll wrap it up for tonight, and we'll see you all next week. We'll go through more of the majors, maybe a little quicker, and we'll also see how the Aussie and the New Zealand turned out too. Okay. Okay, great. Thanks again, guys. Take care.